the recession that we're really feeling right now is what we need in order to correct our current interest rates.
Yeah.
By next year, in fact, we're going to see even more of an improvement, but feds want to keep interest rates around 5% and let that hover for a while until we're really able to get everything almost accounted for with goods and services, fuel, automotive, everything that really matters to our economy to help keep that afloat as well.
Yeah.
Because we've seen that inflation all around. You know, typically it's gone down from last year though, but it's still there, believe it or not.
All right, guys, welcome back to the Pursuit of Property podcast. Today, we are joined by our good friend, coworker at Real, and amazing realtor, Nik De Jong. Nick, how are you?
I'm doing really good. How are you today, Scott?
We're doing good. Nick has been in the forefront of our minds for coming on for a while now. With the 100th episode, Cade going out of town, a few bumps in the road. It's taken us a while, but we're pumped to have you here because, Nick, you've just got a unique background and just general understanding of both real estate and then the regional banking world. And obviously, you've also been in sales for a long time. We've talked to you a lot about the Ironman stuff that we're doing. So we're just pumped to just sit down and have a cool conversation today.
Absolutely. Kudos to you, Cade, as well, Scott, for the Ironman. That's a very, very high achievement, and I look forward to cheering you on when you go and compete.
Hey, we appreciate it. If you're not listening to the podcast, Nick is absolutely jacked and makes Cade and I look like twigs. So whenever we talk about biking, we have to be careful because Nick is a very pro biker. So
you're too kind.
Let's jump into it. Nick, you've been in real estate for how long?
7 years now.
7 years. What were you doing before?
I was working at a bicycle shop.
See?
Here in town?
Yeah, I worked with Herb Bauer Bicycles for about 2 years, and I used that time to get my real estate license, failed the test a couple times and, get things on track.
Hey, if you've been out of the game of school for a while, tests are not natural for some people. I suck at test taking. I don't know about you guys. So you were in the biking world. How did you even get introduced to real estate?
My brother-in-law is a real estate broker here in Fresno, and my mother was a realtor as well before she passed. And when I was going through some of her stuff, doing a clear out of the property, you could say, I found all her real estate materials.
Oh, really?
Started thumbing through it, and I thought, you know what? I could probably do that too.
Okay. And at the time, was there a reason for the job change, or was it like, hey, you know what? This is something I've kind of always been interested in?
Absolutely. There was a reason for the job change. I was a EMT for about 10 years at Clovis Community. I loved it. Loved working with the people. Loved the high intensity job, the stress, the adrenaline. But I tell you what, it's real hard work. And, kudos to all our hard working doctors, nurses, and EMTs out there because it's not an easy position to hold. And 10 years was my cap. And after that, I just had to regress and I had to start over. Because as you know, in this world, there's always a change.
Yeah. Wow. So you did it for 10 years. I didn't even realize it was that long of a span. Okay. And, I kind of think it's interesting because you went from that, which is very much like odd hours, long hours for not nearly as good pay, to now this, which is like a very similar high emotional intensity job. At least, I don't know, I would say.
Depends who you're working with, I guess.
Yeah, not like an EMT.
It's a different stress. And needless to say, it's not to be discounted at all. The stress of dealing with someone's life is holds value over everything else. But when you're dealing with their money, it's a little different impact. And that's something that can either hurt us or help us in this industry.
Gotcha. Do you feel like there's a lot of overlap between EMT and what you do now?
Absolutely.
Huh. Interesting.
And Nick, so the transition went 10 years as an EMT, then working at the bike shop for, you said, a couple of years, and then the transition into getting licensed and hit it full time as soon as you got licensed in real estate?
Absolutely, Cade. That's exactly what I did. I just went full bore.
We were just talking to Cameron Rosso. He's over at Real, and kind of his story. He cold turkeyed, made that job change right into real estate. Obviously, we're commission only. I'm sure at this point you had a family, you had a mortgage to pay. How was that kind of jumping off the edge straight into hitting it full time?
Well, I listened to that podcast with Cameron, and my story was very similar to that with him as well. That you just get to a point that you're either put in a position where your back is against the wall, whether it's losing a job, or you get into a position where you know that the best thing to do is just to really step up. And for me, my why was my family. When I was working as a young man in my 20s, I worked at bicycle shops for about 10 years, working with Stevens bicycles, and I loved it. And that's when I was competing and racing and cycling. Then I met my wife and became an EMT. And I was blessed with 2 kids that were 3 and 5, and they're my kids now. So the nice thing is about it, I really get to enjoy just my family, and that's really what drove me. You got to find your why. And just like Cameron found his why, and both of you have your whys, I think that's very important that we have to identify it and be reminded of it often.
So, okay, so go back there. So you were in the biking, then the EMT, then you got married, and then you start a family, and that's when you decide, I'm going to just jump and go full board into real estate. Jeez.
And where did you start in real estate? Did you start on a team? Did you start solo? Because obviously now we know you're over at Real working with Danny and the awesome people over on the Danny Grubb team. How did you start now?
Thank you for asking. I actually applied online at Coldwell Banker, and it was directed to Brandon Gonzalez, who was the manager at that time. And he hired me on as an online recruit. And I started sitting in on meetings and going to open houses, and then slowly started formulating a plan from there.
Yeah.
First year, I sold 3 homes.
Hey. Oh, okay. Let's go through this progression, because you started a couple years before us, and so, the market still, we've had a great run up, which has been nice, but you started when it was even slower and still recovering from the recession. First year, you sold 3 houses. What was that like? I mean, 3 houses 7 years ago, that's got to be like average sale price like $260 or $250.
It was amazing. I was so thankful to be at these Fresno State games and see a commission check for $2,200.
Yeah.
I mean, I was doing flips. I loved it. I loved it. We prepared for this. We had a savings, because you should always have a savings before you make any leap of faith like you do.
Yeah.
You can't just do it blindly, but the credit card debt did incur, and then from there I realized, okay, I can't just live a life as a realtor off 3 homes a year. Mm-hmm. Got to step it up.
Okay. So first year you did 3 homes. I have to guess that you had a lot of pressure behind you, or was the family like super supportive? Like there was never any hard stuff?
Super supportive.
Okay. Mm-hmm. Well, that's super helpful. I'm always curious for people who are married, who have responsibilities when they make the leap. When
Bills
we
to
made
pay.
the leap, we had very few bills. So like if we failed, the worst case was like we were broke. Versus people like you, it's like you guys have a home, you have kids, you have medical bills, things like that. Second year, what happened? Did it pick up pretty dramatically?
It did. I about almost tripled my business the second year, which helped out a lot, and that started helping us get, above water and really be in a, financially better position.
Wow.
Mm-hmm.
Okay, so year 2, you did like 8 houses, 9 houses?
9.
So you tripled your business. Then next year,
I think I was closer to about 13 or 14. So it just slowly increased.
Boom.
But I wasn't doing big stuff. All these, you hear those wonderful stories about the agents that do 20, 30, 40 deals a year, and that's great. But a real intelligent agent I met years ago always told me that there's plenty of pie for everybody, and you just need to know what your number is, what your operating costs and expenses are, and then you break that down, and then you give the rest of the worries away. You don't dwell on it, and you just keep pushing forward. Yeah. And in this business, for a lot of new starting realtors, that's all you got to do. Just keep moving forward, one step in front of the other.
That's a really good point, because I was going to say we have a lot of new and younger real estate professionals who listen and get a ton of value from our podcast. That first year, right, selling 3 homes is awesome. What do you attest that giant leap and the progression afterwards too? What kind of activities were you doing day in and day out to make sure that second year was a big year of growth for you?
I found the smartest realtor in the room and started learning from him, hosting his open houses, seeing how I could help him out, assist.
Yeah.
Because you learn from speaking with others really what to do and what not to do. And from there, that builds a relationship, and then that also builds your business too.
Yeah. What's funny is the first day I met you, when we left from Manhattan, my wife was like, I really like that Nik guy. He seemed genuinely curious about what everybody had to say. I didn't tell you that, I don't think. But it's interesting because you still hold that kind of like, you're always seeking information, and like you never come off as somebody who knows more than somebody else, even in subject matters that I know you know more than us in.
Well, as a Christian, I think that was what I would like to live my life like. I wouldn't want to sit there and try to devalue others. And if anything, we can build this business by working together.
Yeah. No, I think it's a great way to live, and obviously you're a great example of somebody who does it day in and day out. We try to always sit here with somebody like you, and we know that you're an expert in a lot of things that we don't know anything about, and we just try to learn. So I'm glad we're all kind of cut from the same cloth there.
Thank you, fellas. I appreciate that.
Nick, I wanted to kind of transition this to Scott and I. We had like a pseudo mentor tell us a couple of years ago. He was like, dude, what you guys need to do is get on the board of a bank. Get on the board of a credit union here in town, start to build those relationships, start to build those connections. And Scott and I were bullshitting it, with you in the office one of these days in the past. And we find out you are on the board of a bank here in town. And I think we really wanted to spend some time talking about, one, what that not only has done for kind of your professional networking and your business, but how all of that knowledge and all of those relationships have really helped you grow your business and grow yourself personally and professionally.
That's a good question. And for me, the biggest blessing of all was standing in that line at EECU in COVID time with a mask. And I saw a sign on that said, accepting applications for volunteers for EECU to be part of their associate volunteer program, or they like to call it AV program. See, for those of you that aren't too familiar with EECU is actually one of the larger credit unions that we have here in Fresno. Because of that and their operating value here in Fresno, they actually not only have multiple branches, but they've been serving the Fresno community since 1934. So this is an old school credit union. In fact, the National Credit Union Administration wasn't enacted until 1970 to start protecting credit unions. So EECU has been operating for a very long time, even before that came into effect. And so for them, they're a 100% member-based owned structure. So as a credit union, they operate on a member-owned model, and it means that all their profits are reinvested back into the credit union and for its members.
Gotcha.
When I started learning about that, I thought, wow, that'd be something I'd be interested volunteering for, because it really seems like they care about the community. And boy, was I right. It's a process, though. You go through an interview process, and you actually interview in front of all the board of directors. During that time, I did it during Zoom, which was even a little bit more intimidating, especially with the questions that you might receive. But really, it's important to them because the board of directors is composed of a large group of members, about 25 board members, that oversee the board, oversee other expenses, costs, and make sure that the accountability is there. So for them, it's a big deal to even volunteer and get to sit in on a meeting. Well, I was blessed enough to sit in on a meeting, and then after that, I was able to learn more about EECU. I received a call after that they wanted me to come back as an associate volunteer, and so I did that for actually 2 years during COVID. 2021 and 2022 was working as an associate volunteer. And what an associate volunteer does is you get to have the opportunity to sit in on board meetings. You get the opportunity to go to different public functions that EECU might donate to or host. And you get to learn really about how the credit union impacts our community and the strength that it provides by educating our younger generation about the importance with finances, just kind of like what we do as realtors for housing.
Yeah.
So that was one similarity that right away I just clicked with. And I love the educating new buyers. Love to educate new buyers because you're giving them the opportunity to now make money and have something that they never would have had if they didn't know.
Right.
Same with the ECU. They are really based on just adding value by offering different types of coaching for financing to different types of loan programs and different types of situations that might help people get out of a certain debt and pay a lower interest rate so that they in turn can now make money and get themselves in a better position financially.
Can I stop you right there? I don't mean to interrupt, but I didn't know that EECU provides that kind of coaching. Like, can you because we come across people who get in a lot of bad financial spots, and then we tell them what we know. But it's cool to have a resource that we can actually send them to. What's this coaching all?
It's all online, baby. That's the best part about it. Yeah, if you just go to their website, it actually has a link where you can just go into different financial questionnaires, and you can talk about things like that. Of course, as a member, you have access to that right away. But even if you're not a member, you can still at least apply and then speak to somebody on the phone to see if that's something that you might be able to be granted access to. Believe it or not, for home loans, auto loans, all those things, they would like you. EECU prefers for you to be a member with their credit union. But if you're not, that's okay. At least apply, submit your information, and speak to one of their representatives to get a better idea.
Yeah.
Because believe it or not, when you're a large credit union like this, they're actually not making a big profit. It's the smaller credit unions that are worth under $1 billion that are making about 4 basis points for their clientele based on their loans that they service and on the products that they sell, versus a larger credit union like EECU with over 22 branches, they're only about making a 1 basis point. So
It's a volume.
it's a volume.
You've used them for auto loans. I know Kayla and I we're paying off our auto loan that we have there. I think we have like literally 2 payments left.
Yeah.
But I think it was like literally when we compared apples to apples, EECU, especially for the auto loan, was like way cheaper. Cheaper.
It was wonderful. It was wonderful. And so now learning about this as a volunteer, you realize the benefit behind it. And then you start getting educated. Well, after 2 years of being an associate volunteer, I was asked by a board member if I would be interested in sitting in on a supervisory committee. Supervisory committee, to me, I had no idea what that was. I thought I was like a board member and I get to wear a suit and tie and everything. No, it has nothing to do with that. So you have 2 essential operating boards on the board of directors. You have the board members, and then you have the supervisory committee. The supervisory committee is actually a governing body that's responsible for ensuring financial stability. So what they do is they do internal auditing, compliance monitoring, risk management, and they even check into financial reporting by the board to make sure that everything squares up and looks good. It's a way of providing additional checks and balances to the board. After all, with most credit unions, they are member owned and operated. So by learning about that, it opened a whole new door. And that's when I saw as a realtor how much we have links in banking and real estate mortgages, and really where the biggest strengths are and what we need to be prepared for in the future.
Gotcha. Well, I want to preface this by saying if we ask any questions that obviously EECU doesn't want you to talk about because maybe it's not public knowledge or it's still in debate, feel free to just say that. But I'm curious. Part of the reason we thought it'd be interesting to have you on is because there's obviously a regional banking crisis of sorts that's hit some of these bigger regional banks. SVB and a couple others come to mind. Are there still ripple effects going on? I feel like it's kind of fallen out of the news a little bit, but are you guys still, as the supervisory board, having to go back and do a lot of risk analysis and seeing maybe if you guys have ripple effects from these bigger banks going under?
No, we don't. The best part about being with a reputable bank like EECU is that's something that will never happen. When you have a federally insured credit union that is backed not only like the big banks, but also through the National Credit Union Administration, the likelihood of some type of collapse like that is just zero. It's never going to happen. This ripple effect that we've seen through some of the other banks, it's more described as something that because of them having larger amounts of cash that were taken out in a faster period and also led to them not being able to keep up with the amount of demand that the cash was being pulled out of these banks, it's what led to a collapse. They weren't prepared for that type of amount of withdrawal. Whereas EECU, the average, account holder has X amount of dollars and they're protected, 20 million in fold each account holder.
Gotcha.
So even if something were to happen per se, if you bank with a reputable credit union, your money is safe.
Gotcha.
Well, Nick, let's continue this too, because a lot of, You hear a lot of talking points in the news and the media, right? The word recession has been thrown around for, at this point, probably over a year. That word's still being thrown around, right now, as we go towards the end of, this year in 2023, everything's still going to be hit really hard. It's coming, right? With all of, the knowledge that you've gained and, obviously you being as smart and as disciplined as you are with gathering all of this, information and doing what you do, what do you foresee kind of big picture happening for us through the end of this year and maybe into next year?
Thank you for your compliments, Cade. You're a true gentleman. But, what I see really is nothing for us to worry about. In fact, predictions are going to say that, we're probably going to experience, a mild third and fourth quarter before interest rates really start to improve. But compared to the 1990 recession, the 2001 recession, the 2008 recession, they're all typical like the ones that we've lived through in the past. But really, this one is going to be a lot milder than what we've even seen compared to back then. In fact, this recession is a little bit different and compared to 81, 82, because there was such a dramatic Federal Reserve interest rate increase, which was nearly around 20%.
Right.
But now, we're seeing interest rate increase, about a 7%, and then it's been slowly going down from there.
Yeah.
And I know interest rates right now, you're probably about 6.5% on FHA, and then maybe, sub 6 on, VA, depending.
Yeah, like six even usually.
And 6 even, yeah, exactly. So really with that, prediction, the recession that we're really feeling right now is what we need in order to correct our current interest rates.
Yeah.
By next year, in fact, we're going to see even more of an improvement, but Feds want to keep interest rates around 5% and let that hover for a while until we're really able to get everything almost accounted for with goods and services, fuel, automotive, everything that really matters to our economy to help keep that afloat as well.
Yeah.
Because we've seen that inflation all around. Typically it's gone down from last year though, but it's still there, believe it or not.
Yeah. Well, and I think I saw the most recent report was somewhere around 5%, which correct me if I'm wrong. I think the Fed wants to be 2.25 or something like that. And, I'm curious when clients are working with you, they obviously know that you're a smart guy. How has some of this knowledge kind of affected some of the advice that you're giving clients? Because for me, when people ask me what the market's doing, I'm going mostly off of what I'm reading in the news, but you have kind of somewhat of an insider's knowledge because you're with a very large credit union who has the ability to spend time really researching this kind of topic.
Well, that's the best part is really the insider knowledge that I've learned is pretty much what we have all access to as realtors nowadays, to look up and to really stay ahead of for our clients. For me personally, if it's taught me anything working with EECU as a supervisory committee member, it's to have confidence in our market, have confidence in our purchases, and that when we're ready to purchase a home, granted, you are going to be paying more than you were, 2 years ago.
Mm-hmm.
However, that's going to all change and improve. And really, it just boils down to the right time to purchase is when you really need to and when you're ready. Not when somebody tells you that it is, or not when, the market prediction is amazing.
Yeah.
Usually the best time to buy is when we're trying to work out of a recession, which is right now we're coming pretty close to. And from what I've seen in our recent inventory, we have nothing available, and our sales have still been up there. In Fresno alone, it was 716 sales last month in Fresno.
Mm-hmm. Well, and anecdotally, I'm noticing multiple offers again over asking, no appraisal. Feels very reminiscent of when we came right out of the COVID recession. Mm-hmm. And I'm curious to see kind of how the next few months go because, like you had mentioned, we were expecting rates to come down by now, but now the Fed sounds like they're going to keep them kind of steady for a couple more quarters. So I'd be interested to see kind of what happens there.
Me too. And really, one thing that we also want to watch is our labor market, because as our labor market continues to remain strong, that's also what's kind of changing up this correlation. Typically, when you have a lower interest rate, you actually have a little bit higher unemployment. But right now, our unemployment is the lowest it's ever been.
Yeah.
It's continuing to stay at that. And typically, we want to see unemployment actually increase.
Yeah.
As brutal as it sounds.
Yeah.
Well, it's the only way to tamp down demand.
Correct.
And Nick, does consumer debt play into this at all? Because I know, and correct me if I'm wrong, I think I've heard and seen this a couple places where consumer debt, credit card debt, personal loan, stuff like that is at the highest it's ever been in our country. How big of an effect does that play into everything we're talking about?
It plays a huge effect, Kate, and I'm glad you asked because, believe it or not, the consumer spending in U.S. is about 2.5% of what all the Fed is hoping that consumer spending will offset that. So basically, with this 2.5% of consumer spending that's increasing, they're hoping that that's actually going to have a dramatic recession consumer effect, and it's going to help mend this problem that we faced from the pandemic.
Yeah. So, and forgive me, I am the uneducated person in the room, so I'm going to ask a lot of dumb questions. But if what I'm hearing you say is what the Fed's trying to do by keeping the rates where they're at, they're trying to tamp down that kind of discretionary spending that we still have from just COVID, where everybody had a lot of extra cash because we were getting, stimmy checks. Is that what you're talking about? Or did I misread that?
No, absolutely. That's exactly what we're talking about. And the banks know that the Fed has a very poor track record, right? They already know that. Yeah. So every time there's a large spike in interest rate, what happens? A recession follows.
Yeah.
And so what they're trying to do is they're trying to be real careful about this now because they know that consumer prices for food rose. They know that consumer prices for energy rose. And, last year with us hovering right about 8%, as of really what they still have to figure out is where do we need to go with interest rates? Because if home prices start to decline dramatically, they're going to have to drop interest rates to compensate for that.
Yeah, they're not going to let a crash happen.
No, they don't. And they don't want to because that's just going to make things worse.
Yeah.
Well, and on that point, I want to ask you, Nick, because we always like to ask, our guests who are licensed, especially these past few months, because we've dealt with hearing this from our clients, is the clients who come to you and say, I'm ready to buy, I'm ready to pull the trigger, I've got my money lined up, I'm just waiting for the crash so I can come in and get a great deal, right? How are you, rebutting that with your clients?
I just tell them, I lay it out for them, and I let them know that predictions are that inflation will come down. And fairly quickly, we should see us back by a 3% range within third quarter of 2025. But that's 2 years you're going to have to wait. And that's also 2 years that your home's probably going to gain value while you have ownership until you refinance.
Yeah.
So if that's a payment that you can float and the numbers make sense, there's no reason to deny it because as we've all seen as realtors in this industry, that whole home price crash thing where all the home prices dropped dramatically and made it affordable for everyone, I haven't seen it happen yet. I'm still waiting for it.
I literally, I've been hearing that it's going to crash every single year I've been in the business. I don't know if you've had the same because you're a little bit further in it.
No, we do.
But since 2018, I remember in 2018 in December, it's going to crash. It's a bubble. 2019, it's going to crash. 2020, here it is. It's the crash. And every year it's just gotten more and more. And, just like what you said, the advice that I try to tell people is if the time is right for you and you can afford the payments, this is the important part, go buy a house. Because if a house price goes down, but you can afford the stroke, it doesn't matter. But if you can't afford the home and then it goes down, then you're in a bad spot.
Exactly. And that's really what we want to prevent our clients from running into.
Yeah.
And really educating them because, mortgage rates have tripled since last year. We know that. And who's going to benefit from that? Really nobody.
Yeah, bank isn't making money.
No, refinances are, that's non-existent. So really, the only way for us to see a decrease in interest rates or for our market to crash is through a recession. And right now, where we're at with GDP, unemployment, I'm seeing a very healthy economy still continuing to flourish through. So really, for our clients, the best thing for them to do is, like you said, when they're ready, pull the trigger.
Well, Nick, I don't know if you saw this too, but we got this graphic from MBS Highway. We sat in on a Zoom, and they're like a big economist data gatherer, right? And so they had a graphic that they put out, and it was called "Betting Against the Champ," right? And in calling the housing, market and appreciation, is the champ. And since 1942, the only instances when housing prices declined was between 2007 and 2011. We had a couple, obviously that big housing recession.
Right.
The only other year since 1942 there was a decline was a -1% in 1990. Everything else has been green.
It's the low single percent.
And yeah, MBS Highway, I mean, they're very reputable. Barry Habib, great guy, very, very educated.
Yeah.
And so to learn about that, it just proves the point that really we're in a business that's going to continue to need educated agents and realtors, who really can just help out in every aspect.
Can you talk a little bit, and I know that you're not like a financial advisor, so all the advice that we're seeking is really just personal opinion. But as somebody who's been on a board for a bank and who's kind of watching how these regional banks are working, if you're looking at a smaller fish like us, who's either running a small business like a realtor or an investor, or is trying to start a family like a young family, what kind of advice would you be giving right now, kind of just seeing where the economy's at? I mean, my general take would be try to cut all your expenses to as little as you can and focus more on really nailing the basics of hitting a budget, watching your budget to a T, making adjustments in real time, not waiting 6 months and then looking back. What kind of things would you recommend?
I agree. That's something that, we have to touch base on with our clients. And you're 100% correct with that, Scott. Another thing too is to look into other options. Like if they do have some credit card debt, see how they can maybe alleviate that debt and put it onto another card that may not have as high interest rates. Or, even finding, like what I did is, believe it or not, you could still take cash out of your property. If, you have a good amount of equity down, you can use that to pay off your bills too.
Gotcha.
But yeah, the operating expenses, that's huge. In fact, when I sat down with my first real estate coach, they broke it down to me that, you need to know how much you operate every month. That includes, every child in the house, including my dog, that includes, everything. And after I was able to break that down, it let me analyze that more as an agent and as a employed, realtor, that, okay, this is what my goal needs to be. This is what expectations I have now. And you can really meet that. You got to set those goals. I think that's what we forget about more than anything is everything that we dream for is achievable. We just need to manifest it, and then we just need to act on it.
Well, and Nick, talking about goals, I'm curious just to hear your own personal goals, either, kind of throughout the rest of this year. How do you goal set for yourself? Are you more of a short-term guy? Are you longer-term, looking at bigger picture? What kind of goal-setting tips do you have, and how do you kind of set your goals for yourself?
You know what? That's a good question, Cade. For me, goal setting comes down to what my total gross is going to be and how many units I sell. I would like to continue to improve on that because I am not I do not own any rentals yet. And so my goal is to own my first rental this year.
Dude. Well, and let's talk about that because you and I had a conversation about it. What I love about you is that you're very ready to go. Like it's not a how, it's like, let's just I will figure it out. Let's go. So let's talk through that. I mean, what are you looking for in a rental?
If anything, I'm looking for something that's going to have probably like a good return on investment, and what I see is lately, some of the best return on investments have been out of state.
Okay. So you're thinking out of state.
Definitely thinking out of state. I would like to get something with multiple units.
Okay.
But obviously, if it were to be something here in Fresno, I would consider a house just because that's something to really, as a realtor, we can manage our own properties as well as be able to handle any problems. And that's also a great way to start wealth because just by me owning a home for the next couple of years, I'm sure it's going to gain some value.
Yeah.
And then at the same time, I can use that as a 1031 exchange and then turn it into something else.
Dude.
So there's definitely a good opportunity. And I agree with you. We learn as realtors that if a good deal comes on, and it's available, to just act on it. Because really, by waiting too long, you could miss out on that opportunity or really dismiss the actual success that you might have from it.
Yeah. And with your experience where you're at 7 years in, you sell a lot of houses. You have a lot of good people around you to help you kind of analyze the deal, make sure that you're not making a big mistake, especially for a first rental, which there's always the chance. But I feel as if your goal is to get a rental this year, you'll probably do more than that. You'll probably do 2 or 3.
Thank you, Scott. I look forward to it, and that's definitely something that I would like to achieve. But, all in due time.
Yeah.
And I was going to say a quick timeout because we've got people who listening who are, not just newer, but people who do have deals under their belt who are looking to assign deals when they come across their desk. We've got a buyer right here. So if we've got a deal that pencils and makes sense, here in the Fresno area, please keep Nick in mind.
If you have something that's like a long-term buy and hold, hit up Nick. We're going to put his info in the description here. You hit me up on an A-class neighborhood. Can you talk through your buy box? Do you know kind of what type of property do you want in Fresno? Because that's typically who's going to be listening to this podcast.
Yeah, A-class neighborhood would be great. I mean,
okay,
we all know the value behind that, especially with getting a good renter in there. And right now, there's still a very big demand for renters, and especially in the better communities that we have here in Fresno. And with the influx of people from different parts of California that have been moving over here, they need a place to stay in too until they find their home. And a lot of them are not ready to purchase yet. So yeah, A-class neighborhood would be great. Definitely looking into, multiple units as well. But for me, I've learned that, not to be choosy and more just look into the opportunity and really just have the foresight to see what you could have potential with.
Yeah, man. Well, I mean, before we let you go back to your day, obviously there's people listening right now. They're probably new realtors, new investors, people that want to get into real estate. What would you want to leave them with as kind of like the last thought for kind of the best nugget from Nick?
You know what? My business actually improved when I gave my worries to God. So, I know that this doesn't have to be a spiritual podcast per se, but I want to let you all know and viewers out there that when you just leave your worries with him, everything just gets better. And after I started worrying about the deal, my mentality changed, and then the finances changed, and then my clients saw a different attitude that I had compared to before. Really, you got to find what it is for you, to bring that inner peace. Because once you have that, it's exuded in everything you do. People see that, they feel it, and they know it.
That is, I think, one of the best pieces of advice that we've had somebody say.
100%.
You thought through that a lot, huh? You've listened to a lot of the podcasts too.
Oh yeah, long-time listener.
Long-time listener, first-time caller. Dude, well, thank you so much for coming on, Nick. Your knowledge is immense. How is the best way for somebody to send you a deal?
You know what? You can just reach me direct at my cell at 559-375-4097.
Boom.
Or email me at Nicholas, Nikolaus, @grubrealty.com. I got you.
There you go.
Boom.
Nick, thanks so much for coming on. This is going to be live shortly here, so you'll be able to hear your own pod.
Thank you, Scott. Thank you, Cade. You guys are amazing. It's been truly wonderful hanging out with you, and I really appreciate the opportunity today.
No, thank you.
We appreciate you. Thank you, Nick.
See you guys next week.